Hello everybody, welcome to the technical analysis webinar with AvaTrade. My name is Troy. I'll be presenting a quick systems check as we get going. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind, no one trade is guaranteed to profit. We all understand that, I think. There's risk with each and every trade that you take. The flip side of that is there are also nice potential profits with each and every trade that you take, which is why we're all here, to hopefully from an educational perspective, not to be taken as financial advisement, go after those potential profits in a way that manages risk, that aligns with your risk tolerance, your balance, etc., to put together some ideas and some strategies that hopefully will improve upon your win percentages as you go after those potential profits. And as long as we're mentioning risk management, there's a special tool called AvaProtect that's available on our award-winning mobile app, AvaTrade Go. And also this AvaProtect risk management feature is available on our web trader platform. It's a feature that allows you for a small premium cost to protect against any and all losses for defined periods of time. And so that's available on gold, silver, and pretty much, I think, all of the FX pairings. And so that could be part of a risk management plan. We'll take a quick peek at where you'd see that in the order window. Now, real quick, what is technical analysis? Technical analysis is looking at the historical movements on charts, usually candlestick charts, where we can look at the price movements of a particular instrument that you're interested in trading on and look for repetitive patterns, look for price levels that seem important. We refer to some of these price levels as support levels or resistance levels, and we can work our entry points and exit points with different strategies around these movements, these repetitive patterns that we might find on the charts. And while the historical movements are no guarantee of future movements, they do many times assist with opportunistic entry points and exit points. As we typically do in the webinars, we'll lean on the manual methods of technical analysis, which means drawing our own lines, finding the price levels, looking for the patterns, etc. Indicators can help in that regard, but you don't learn much from an indicator. And actually, you can be smarter than the indicator, because if you're looking at the same patterns the indicator is programmed to look at, that's what they do. They look at the historical movements and try to tell you when the market is overbought or oversold, etc. The manual methods allow you then to think through those movements and those patterns and also apply some reasoning in terms of the fundamental news at the same time, which most all indicators cannot do. And so we'll take a quick peek at the fundamental news as well. And I'm not against indicators. Sometimes we'll throw an indicator or two on the chart, and they can work, in my eyes, as confirmatory mechanisms to confirm maybe what you're already thinking manually and fundamentally about the direction you prefer to trade. And indicators then can help you with the timing of that to confirm whether you believe the movement is overbought if you're looking to sell, or oversold if you're looking to buy, etc. But many times an indicator can't tell you to buy in a rising market because it's always telling you it's overbought when the market's rising, or vice versa. The indicator is telling you to sell, or I'm sorry, to buy when the market drops, when the indicator believes the market is oversold. And I think we all understand that when there's a lot of momentum, the market goes up and breaks a resistance level. The technical analysis will tell you if the resistance level broke, then maybe you buy from the high point. And most all indicators are going to be telling you, no, it's time to sell. It's time to sell. The market's overbought. So indicators I believe when you know the direction of the sentiment for the day, indicators are right 50% of the time. When the indicator is oversold in a rising market, then it's telling you to buy and it's doing well. When an indicator is overbought in a rising market, it's telling you to sell and it's not doing so well. So if you use indicators, combine it with your knowledge of the fundamental direction, the sentiment, and then only trust the signals that align with the direction of the sentiment. And that's what we do with our manual methods automatically. Okay, and I hope I didn't thoroughly confuse you with that explanation of the limitations of indicators, but you'll get a feel for it as we get on the charts with our manual methods to understand that sometimes you're buying from high points and selling from low points and not just waiting for things to drop to buy or waiting for things to rise to sell. If you have any questions as we go along or you want to give any input, please do so at any time in the chat box. That's what that's there for, is to communicate with me. All right, so let's take a quick look at the headlines. I know our focus is technical analysis right now, but let's quickly look at the headlines and see what's the sentiment right now. Is it positive, is it negative, or is it mixed? So couple headlines, couple driving stories. One of the driving stories really for the past couple weeks has been the new variant of the COVID virus and how rapidly it's spreading, and the fears about economies maybe needing to be scaled down or shut down partially in order to deal with the rapid spread of this new COVID variant. So that created some fear in the markets, caused the USD to strengthen the past couple weeks, and some of the stocks and indices maybe to pull back some, and gold to drop off as well as the US dollar strengthened. And oil to pull down, as there were fears of economies shutting down or slowing down because of the spread of this new variant. Then there's fears that, well, there'll be less demand for energy and oil then, and oil pulled down as well. So we see the headline: spread of COVID-19 Delta variant knocks oil demand outlook by the IEA. Well, there's another negative headline for oil, right? The oil demand outlook now has been lowered. Okay, it knocks the oil demand outlook. What they mean is it's lowering the outlook, and that headline just came out today. Could create some renewed fears again. And don't forget, OPEC plus nations recently agreed that they would increase production, right? So that's a situation. I have someone saying that they lost audio. They're typing. Type okay if you're still hearing me clearly. I just want to get a general feel for everybody. Type okay in the chat box if you're hearing me. All right, great, thank you. So it's just the one person. I'm just typing a quick message that the audio is fine, and anyone who has trouble, check your side. Okay, so I sent that message out. All right, so some fears about the COVID-19 Delta virus spreading, and it really is spreading. There are airlines starting to shut down flights, from certain countries to other countries. Flights are being more limited. They're not letting flights in, etc. This is a sign that fear is growing again. Now, the other main headline, Nawaji, we're going to get to that. You're asking, how do I know when to buy or sell in the market? And we're going over right now the sentiment. And so we just looked at the sentiment for oil. It feels like the sentiment is negative for oil. Okay, the sentiment looks negative for oil, and really negative in general if there's fears about the COVID virus spreading, which that headline we just looked at shows that there is. The headline says the IEA feels that there's so much problem maybe coming from COVID once again, from this new variant, that they're lowering their outlook for oil demand. That's a sign, okay, of sentiment. Doesn't mean that will actually happen, but that's the sentiment right now for those who are in the IEA, which is, people listen to them when they talk. So that helps drive sentiment for the day or for the moment. Now, the other big storyline, other than COVID, this new variant for COVID, the other big storyline has been, is there too much inflation or not? from all of the stimulus around the world? Should there be inflation fears or should there not be? And we keep seeing, PPI numbers, factory production numbers, all of these numbers that come out that are gauges of inflation. We keep seeing the numbers higher than expected. And that created some fear that, wow, inflation's out of hand. And the US was actually thinking about scaling back their stimulus bond buying program because they thought they were helping the economy too much, right? So we were in a unique situation where when the news was too good, when the PPI numbers were too good the past month, there were fears that, wow, that means they might cut back stimulus in the US. And so the market actually sold off with good news. Usually PPI numbers better than expected, hey, that means there's great demand if the purchasing price index, that's what PPI stands for, purchasing price index, if the prices were rising faster than expected, then usually that's a sign of great demand and a strong economy. And usually that would make the market go up. But now we're kind of in bizarro world where if the PPI numbers are better than expected, if the prices and demand is higher than expected, then that actually creates fears that stimulus might be pulled back. And you actually see a sell-off in the market and a strengthening of the USD and a sell-off in gold. Okay, and so it'll be interesting to see these PPI numbers out of the US and jobless numbers out of the US. Specifically, they'll be looking at the month-to-month comparison and the year-over-year comparison for the purchasing price index. Have prices gone up more than expected or not? Okay, we see the last one was 7.3% rise year over year. That's a heck of a lot of inflation. Over 7%. That's to the point where if these numbers come in higher than 7.3, if they come in at 8%, 9% PPI, purchasing price index, showing higher than the expected 7.3%, which is already a high expectation. If that comes in high today out of the US, month over month or year over year or both, you could see some fears of inflation hit the market again. Okay, so really big announcement coming today. That's 8:30 a.m. New York time. So add 5 hours for London time, add whatever it is for your GM, for your time zone offset. Okay, so what we're looking at then is negative sentiment because of fear about the COVID virus spreading, and we're looking at unknown sentiment that could be sparked with this announcement coming this afternoon or this evening or whatever time zone you're in. So that's where we're at with sentiment with a quick look, okay? And again, if we go back here, we can look at the volatility index and say it's pretty flat. Okay, the volatility index, the VIX index, that tells us whether there's rising fear, dropping fear, or neither. And right now it's neither. It's flat. It's slightly up. Volatility is slightly up. The fear index is slightly up. The futures are mixed, but pretty flat. Okay, everything's pretty flat right now in terms of fear, volatility, and the futures market. One's red, one's green. Both are barely moved, a fraction of a percentage. The US 500 futures, US 30 futures. And so it's a sit and wait right now for those PPI numbers, purchasing price index numbers coming out later today. So Arthur, you're asking, is it a risk off today? Listen, when those PPI numbers come out, if they're extreme in one direction or another, you're going to see a huge market movement potentially on the major indices, on oil, on gold, and other instruments. So what we're looking at then is when we get on the charts, we're looking for opportunities to find price levels where whichever direction the breakout move might go, you can take advantage, and also to take advantage of any ranging movements that are happening right now because there's indecision. There's not high fear, there's not low fear, it's flat. The futures are flat, so things are ranging right now. So you can trade currently on the ranging, You can prepare with pending orders, with buy stop and sell stops for the breakout moves with those PPI numbers that come later today, just in case there's a big swing in momentum. That's where we're at right now. It's a ranging day until something changes it. Now, real quick, I mentioned the AvaTrade Go mobile app. You find that here, trading platforms, and AvaTrade Go. You can download it from the Apple App Store, the Google Play App Store onto your mobile device, depending on your operating system. And there you see AvaProtect. You can protect against losses for small premium for defined time periods. You also can program take profit and stop loss, and it will tell you right next to the price that you program your take profit or stop loss. It'll tell you exactly in your account currency what your potential profit is to that price and what your potential loss is to the stop loss price based on your trade size and the price you enter. So the order window, before you buy or sell, the order window acts as a trading calculator, telling you how much margin is required for the trade size, how much you're risking to your stop loss, how much you stand to make to your take profit, etc. And you also can manage risk uniquely with AvaProtect on gold, silver, and FX pairings. So very useful tool on our AvaTrade Go mobile app. And if you log in from this login here, you'll be in our web trader platform, which has the same tools in the order window. It has AvaProtect. It has the order window calculating your potential profit, your potential loss as you program the take profit and stop loss. So for beginning traders and also for experienced traders for saving time, even if you know how to calculate your exposure, it saves time to have the order window do it for you. Okay? So there's no guesswork or no having to rush and calculate things yourself. Okay? So very useful platform. Since we're talking about technical analysis, let's take a look. How can the web trader platform help you with your technical analysis? Very simple. Click on the tab. Go to Trading Central. These are premium features that AvaTrade decided to provide for free. Trading Central is a third party that provides very good analysis. And you can get in Forex featured ideas and analyst views, free signals. Here's the technical analysis in the analyst views done for you. Shows you the breakout move that's expected, where the resistance is. So a pending buy stop right up here. If it breaks through the resistance, would trigger a potential breakthrough move up to the next resistance level that is also mapped for you. Okay, this is the EURUSD. Why might there be a breakout move through this resistance later today? The PPI announcement's coming, right? You could have a pending order right up above this resistance level, just waiting for the news that if the news goes in a way that weakens the USD, if it shows super high inflation and that causes the USD to weaken, boom, the euro could break this resistance and trigger your buy stop. And you'd say, well, why not buy now then? Why wait for it to go up? Because what if the news goes the opposite way and it causes it to break the support level down here? And by the way, you could put a sell stop below the support down here. Because if the news goes the opposite way and it breaks the support, that confirms that the USD is strengthening after the report. So the pending orders are waiting for that major news to come on either side of the support or resistance levels, waiting for the breakthrough move to trigger the trade in that direction. Okay. Now it could pull back and hit your stop loss. It happens, but that's limited risk, much larger potential gain. Okay. And so you can look at the signals here on cryptocurrencies. If you're in a region of the world that allows cryptocurrency trading, I know they banned it in the UK, maybe not available in Canada, but there are other areas that we have clients where they are available. You could look at the cryptocurrency signals, and you also can switch to whatever category you want for FX pairings, popular Forex, major Forex, G7 Forex, etc. You can go to whatever area you want. Okay, could be huge movement with the USD Canadian because of the fears with oil. You know, the number one driver of the Canadian GDP of their economy is crude oil. That's their biggest export, the biggest piece of their GDP. And so if these fears about crude oil cause crude oil prices to drop. If the fears about the economy's closing down with COVID cause crude prices to drop further, you could see the USD easily gain on the Canadian, right? So you look at the price levels and look where would be a smart spot to have a pending buy stop or sell stop beyond the resistance levels, beyond the support levels, okay? Yeah, Shane, no problem. All right, there's a question about showing how to do sell stop and buy stops. I will show you on the MT4 platform in a moment. And then also the next question is, does this information have stocks? And the technical analysis is only on the cryptocurrencies and the FX pairings. If you go to Trading Central, the Trading Central feature, there is stocks. There are stocks reviewed, but it's the market buzz. The market buzz covers stocks and it's fundamental news. It's not technical, it's fundamental. So if we go to MS, which is Morgan Stanley, there are 336 articles found, publications found talking about Morgan Stanley right now. So I can click on that bubble in the market buzz feature, and here are the articles. So I can find, this is timestamped 56 minutes ago. I can see what is the most recent article that affects Morgan Stanley. I can click on that, and it'll take me to the website to read the entire article. And I can quickly find fundamental news to trade on stocks. Okay, so the fundamental news is on the stocks. The technical analysis that's done for you, the signals are on the cryptos and the FX pairings. Good question. All right, so let's go to the MT4. Let's take a look at some ideas then about setting up buy stop and sell stop pending orders. Shane asked to walk through that, and we would have walked through it anyways. So I'm glad you asked. We will go through it on some instruments that we think could be affected by the big news, the PPI numbers coming out that will give a good sign of is there too much inflation or not going on that could either renew the inflation fears or calm them, because they're on the bubble right now. It's the volatility index is almost completely flat. So are the futures. They're just waiting to see some big news to decide which way will the market take off with a big run. That's possibly what could happen. So what we do, and by the way, if we want to look at the trades from the last webinar that we simulated, 3 out of 4 were a nice profit. The only one that was not a profit, I accidentally closed it. I was playing around with adjusting stop loss and I clicked close. Otherwise, we'd have been 4 for 4. So we read the market on Tuesday based on the fundamental news. We bought on Ethereum because there was bullishness on the crypto market. There was news about Ethereum recently upgraded their features on their blockchain. And so there was fundamental news and technical reasons why Ethereum might rise. And we found a nice support level. We prepared a buy position and up it went for $600 gain, right? The same with gold. We saw gold pulled way down with the flash crash, we're calling it, Monday. And we saw a nice support level that it was above. So technically it was a good buy. And then we looked and we said, you know what? The US is talking about a $1 trillion stimulus package that they're about to pass, which what causes inflation fears more than $1 trillion US being printed for more stimulus? So we said, hey, there's reason for inflation fears maybe to come back. And the technical support level looked good after the large drop. So we said, okay, fundamentals, technicals are on our side. We simulated on the demo here a buy position on gold, and up it went for a nice profit. I cut these off before the webinar, just a little while ago today. I could have kept them running if I wanted to. These movements could continue, but things went flat today, so it seemed like a good time to close off anyways. And crude oil as well went up after pulling back. Okay, why were we thinking crude oil should go up? Fundamentally, since Tuesday was the fundamental news webinar, we said, hey, they're talking about stimulus in the US, an infrastructure deal for $1 trillion. What? Of course, that would be positive for oil demand. And so we said, fundamentally, there's reason for oil maybe to bounce after a large drop. And it did. So things worked out with those trades, and we added over 1,200 to the demo account, over a 1% gain that day. By the way, if you can gain 1% a day, That's 20% a month, right? Who wouldn't take that? You double your balance in less than 6 months. There's no guarantee every day goes like that. You don't always profit. But if you can combine the fundamentals with the technicals, you should be in a better position than if you're ignoring one or the other. Okay? Try and trade in the direction of the sentiment, but only with technical analysis from opportunistic entry points, right? Or confirmatory entry points. So, okay, we're looking at Euro USD on the 1 hour candles. We see the drop of the Euro against the USD in the bigger picture, okay? That's easy to see why the USD was strengthening because of the fears about COVID. USD tends to be somewhat of a safe haven currency when there's fears about major global economic issues. And so the USD strengthened, and now we're finding that it found some support here. There's the first support level the Euro found against the USD. Then it broke back above this resistance level and found support up here. So what we see is the Euro starting a staircase up. We saw a staircase down, right? Support level here, broken. Creates another step of support, broken, right? Created another step of support here, broken. Created another step, broken. Now the steps are going up. It took a step up, created support, and here we go. It's the first step up in days, weeks even, okay? So now things are in a holding pattern, and the question is, does it break this support and renew a push down, or does it break the resistance and renew and continue this staircase that started on the way up? Okay, that's the question of where we are right now. Let's prepare a buy stop pending order above this resistance, because what if the PPI numbers come out better than expected or worse than expected and create a further weakening of the USD now, a further recovery of the Euro back up? If that happens, if there's really big news, different than the expected news on those PPI numbers that I showed you on the economic calendar that are coming out at 8:30 in the morning New York time, if those numbers come out in a way that creates happiness on the market, then you are going to probably see the US dollar weaken and the Euro strengthen. If the fear leaves the market, the US dollar typically then weakens and the Euro should strengthen. Okay? Not always, but that easily can happen and break this resistance. So I wouldn't necessarily buy right now, right, on the bigger picture move today, but you certainly could say if this resistance level breaks, then there must have been good news for the Euro and bad news for the USD with those PPI numbers. And because the PPI numbers are such a measure of inflation, and everyone's waiting to look at what those numbers will be, if this resistance level breaks because of that news, it could be a huge run up to the next resistance level, which is way up here. Okay, so a buy stop pending order would buy from a higher point. So we simply click the drop down menu, switch to pending order, switch to buy stop, go up here and say what price would mean it broke this resistance. You see the top of this wick? If we get beyond that price, it means we went past the resistance completely. So 1.1753, so let's say 1.1760 to clear this resistance. So 1.1760. And then if we put the stop loss, let's say 10 pips down to get back below this level, stop loss 10 pips risk, 1.1750. And our take profit somewhere before this resistance level up here. So let's say, without being too greedy, just before 118. Okay, so 118, usually round numbers create resistance. So if it hits $1.18 even, you could find some resistance there maybe. And that's close to the technical resistance level as well. So let's say 117.98. something like that for the take profit. Now, you can play with these numbers all you want. Depends if you're a scalper, if you're more patient. Certainly, I'm not here to tell you exactly where you should buy or sell, or even if you should buy or sell. But we're working a theoretical strategy here. Okay, so there we are. There's the buy stop prepared. So what's the theory behind this? If the resistance level breaks, we're assuming that there was good news for the euro and bad for the USD. We know there's big news later today that could drive really strong momentum with a move like that. And so if it hits this price, we're in on a buy. That's what a buy stop does. It buys from a higher price. You do that when you're waiting for confirmation of an uptrend. You put a buy stop at a higher price beyond a resistance level. So if it breaks the resistance and hits this price, you're assuming, it was bad news for the USD and good news for the strength of the euro. And then you're in on a buy. I'm risking about 1/4 or 1/5 of my potential profit. Okay? And now I can play with my entry points, right? I could left click and say, you know what? I would prefer to get in if it breaks the bigger resistance here. Okay? Because you see resistance here, but then you see another resistance up here. And if it clears this resistance, then it's really got some strong momentum, right? This is a personal choice. How much resistance level do you want to see broken before you believe it's a true large movement? Okay? I'm going to go ahead with the first entry and say, okay, I don't need to be beyond this resistance. I'm just going to say if it breaks the first resistance, then I'm in. Okay? And then I'll put my stop loss back below that resistance level. Maybe I'll drag it down just a little bit to make sure my stop loss is truly back below all of that resistance level. So I'll risk a little bit more to be sure it doesn't spike back down and hit my stop loss and then go running up to try and prevent a false stop out before the bigger movement. So if this goes up and breaks this resistance, we're in. Take profit before the major resistance up here. Okay, so we're looking at about double the potential profit now compared to the risk because I gave myself a longer stop loss. So I don't accidentally hit my stop loss if it spikes down before going up after triggering the trade. So I'm willing to risk about half of my potential profit. Okay, very simple setup, and it would only trade if the technical analysis shows that it broke the resistance, and we expect that there could be big news that could cause that later today. The CPI numbers, the numbers out of Great Britain were kind of mixed, more positive than negative, but kind of mixed. I think the bigger driver of the GBP USD will be those PPI numbers coming out of the US today. I think that'll be the biggest driver. So the same method we just used on the Euro USD, you can use the same method on the GBP USD. Now, the question is, well, what about shorting the Euro USD? Could we short the Euro USD? And the answer is, of course you could. Of course you could short the Euro USD. And again, we see the support level here that I drew. Okay, so if it breaks this support level, then maybe you say the USD is strengthening and you sell. So the same way we set up a buy stop up here, you could just as easily set up at the same time a sell stop in case the movement goes the other way. Now, we don't want the price too close because you might trigger the trade before the announcement ever hits, okay? So what I'm simulating here, you actually should set these price levels up, find the resistance and the support, set up your sell stop and your buy stop maybe an hour prior to the announcement. We've got quite a while before the announcement comes. So what I'm simulating here would make sense to set up not right now, but an hour, 40 minutes, 30 minutes before the announcement, find where the price is, and maybe the price is up at this resistance level right before the announcement, and you set your buy stop to trigger if it breaks that resistance, and you set your sell stop to trigger if it breaks the support down here. You understand what I'm saying? So I'm simulating setting up the buy stop and sell stop now above the resistance for the buy stop, and you could put a sell stop below this support level here to sell. But I'm pretending that the announcement is in 30 minutes. And then you go through this process and set up the buy stop and sell stop from whatever those price levels are before the announcement, waiting for the big breakthrough with the news one way or the other, hopefully. Okay, so this setup is a bit premature time-wise to be focused around the announcement that's several hours away. Okay, so I'll delete this simulation of the buy stop on the Euro USD. That process, I would set up buy stop and sell stop above the resistance, below the support on maybe the 1 hour candles like we're looking at prior to the announcement. Okay, now could you just set it up now anyways, because a headline could hit that could move the market? Yes, but that announcement later today then could mess up your movement. Okay, because we know there's big news coming. So right now it's ranging, isn't it? Let's go to the 5-minute candles. Look at this range. Here's our resistance up here. Our support is down here. So right now I could trade on what we know. I can buy on the Euro USD. Why did I buy? Because it's ranging up and down, up and down. The resistance is up here. The support, let's go maybe to 15-minute candles. The support on the on this image is, on the 15-minute candles is right about here. Okay, we saw until some kind of big news comes, the volatility was flat right now. So the pending orders that you'll set up later today before the PPI numbers, the buy stop and sell stop, are for breakthrough moves that could happen if that PPI, if those numbers that come out are way better or way worse than expected. If those numbers come in better than expected or worse than expected, you can have your sell stop above the resistance. I'm sorry, sell stop below the resistance, buy stop above the resistance at that time. Set them up just prior to the announcements, right? Ready for a breakthrough move, because you know that kind of news can cause breakthrough movements. Right now, the market's ranging. Imagine since this morning, if you were trading on the ranging movement, knowing that volatility's flat, that there's mixed news about inflation fears waning, but COVID fears still there, and you see that everything's flat today, you could have been selling from the resistance and buying from the support all day long. Okay, and so we bought from near the support. I can put my stop loss below the support level and my take profit just before the resistance. Okay, now it would have been better if instead of talking for the last 15-20 minutes, I had set up a pending order to buy from just above the support level here, because I would be in much better profit right now. I could have already scalped the profit. It bounced off the support level right as expected, like we would expect it would, because it's a ranging market right now. Remember, after 8:30 a.m. New York time, it probably won't be a ranging market. That's big inflationary news coming out, whether confirming whether there are fears of inflation still, or that the fears should calm even more. That news is coming later today. Right now, it should continue to range unless some kind of big news hits that's unexpected. Remember, there are two types of fundamental news: the kind that's scheduled, which is what we looked at, but also the kind that is extraordinary, that there could be a headline at any second that hits that could shake the market. And that's why we have a stop loss, because this ranging pattern can break with a headline right now that comes out and break the support and go flying the wrong way. Okay, we have our stop loss. Without those unexpected headlines, this ranging pattern should continue. And usually you don't have big breaking headlines. Most of the time you don't. Those big headlines come every so often. And so up it goes, and I can scalp a profit, right? If I had done a larger trade here, I could already have a significant profit that I wanted to close. It's bouncing just as we would have expected it to do. Okay? All right, I'll take my 51 cents. Okay, so what about gold? And just a review. So Henry, you're asking about wheat. Listen, I'm not going to pretend to be well researched in the soft commodities. If you're trading on wheat, you better be studying crop reports, weather, patterns, when is harvest season, all of those things you need to be an expert on to understand the fundamentals and what's happening with the seasons and the weather, and is there a drought expected? Is it supposed to be a good harvest season or a bad harvest season? Then you can start also looking at big news about inflation or not. Okay, you've got a lot more variables that come in with wheat and some of these different soft commodities that makes it harder to trade if you don't know those fundamentals. But I'll tell you what, it makes it a much more secure trade because it has so much fundamentals behind it that if you study those fundamentals and you know them well, then you become actually that much more secure trading on something like wheat, because you have so much fundamentals behind you to understand the seasonal sentiment and the weather sentiment, etc. Okay. All right. So what we're looking at here then is gold. We see gold went up. Let's look at 1 hour candles. Here was the flash crash Monday as the market came open. Gold dropped down to over $100 an ounce, $130 an ounce in a short period of time, and then it bounced. And the question is, why did it bounce here? Okay, did it just, the market decided, oh, that's enough, and it went back up $100 an ounce? Why did it bounce from that price? And to know the answer, you have to look at 1 week candles. If we look at the 1 week candles, let me delete all the lines I've already drawn. When you do your technical analysis, you should do an inside out look or an outside in look to get the small picture and the bigger picture. And what I mean is, if you start with small candles, you got the inside look. If you want an outside look, start going to 1 day candles, 1 week candles, and then you can see, look at this support level here on the 1 week candles. These are 1 week candles dating back to April of 2020. It hit this price on the 1 week candles and bounced. The next time it hit that price, it bounced. Then it hit that price, it bounced. So this time it came rushing down, and look at the exact price level it bounced from, exactly where these 1 week candles, give or take a small distance, right almost exactly where the 1 week candles show that there's a support level in the price. That when it hits this price, it bounces. It hits this price, bounces. Bounces, 3 confirmations of a support level at that price. So this crash came running down, and all the buy limit pending orders kicked in, and boom, the market bounced back up from the support level. Now we're looking and we're saying it reached a resistance level on the 1 week candles. There's the old support level, support right here on the 1 week candle. Here's the flash crash. It broke the 1 week candle support and came flying down. So now it's in between the support level down here and right at the resistance level on the 1 week candles up here. It pierced it, and now it's sitting right at that resistance level. So now we go back to the 1 hour candles and we say, now I know why it went flat here. If I adjust this up just a little, there's the 1 week candle resistance, the old support. Okay, support, 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 broken. Back up, resistance. Okay, it went sideways and narrowed. What's it waiting for? What do you think the gold price is waiting for to decide whether it's going to go above the 1 week candle resistance or go back down towards the 1 week candle support? What is it we talked about that will determine, most likely, whether it's going to break this 1 week candle resistance and ride up further or stay below and continue down? The PPI numbers. Thank you, Pavel. That's exactly right. So most likely, unless some other news breaks sooner, when those PPI numbers come out, you're going to see a broken resistance and a breakthrough, and a buy stop pending order could kick in from up here. Or you're going to see a continued rush down in gold back down to this low down here. Okay, so the question is, where do you put your sell stop pending order? Where do you put your buy stop pending order? Now, again, you might wait. You might wait until closer to the announcement, right? You might wait until 30 minutes, an hour before the PPI numbers come out, and then say, okay, is it still going sideways right here? Now let me set up my buy stop above the resistance and my sell stop below this little 1 hour support right here. Okay, so my sell stop, I might say, if it breaks this little support level on the 1 hour candles, I sell. If it breaks this little resistance level, I buy, right? But it could do that before the announcement. So you don't want to set it up yet, right? Unless you have certainty right now. But right now, I don't think there's a lot of certainty. So you wait until about an hour, 30 minutes before the announcement, 15 minutes before the announcement even. The closer, the better. And then whatever price level you find support and resistance, and it very well may be right here still. I suspect it'll be somewhere near this price as we get close to the PPI numbers. And then you set up your buy stop and your sell stop. And whichever way the news drives gold, whether it's down, it breaks the support, triggers your sell stop, and you're in for a large potential profit, putting your take profit down near the support level that you like, or it breaks through and triggers your buy stop, and you have your take profit up near the next resistance level, with much less risk if it reverses back again compared to potential profit in both cases. Click OK if you're with me on that. Robert, you're asking, what is PPI? Let's go back. Economic calendar. The PPI numbers are coming out right here. You see it's a 3-star announcement, meaning high volatility expected. You see the pop-up. It says high volatility expected when you point at a 3-star. It's a big deal, the 3 stars. So that's at 8:30 a.m. New York time. Okay, you can switch it to your time zone at the top. Okay, I could switch it to my GMT offset if I wanted. Okay, I just leave it on New York time. I know how to adjust it from there. So if you're in London, you add 5 hours. If you're somewhere else, you add the appropriate GMT offset. So this is what we're talking about. And you might say, well, what are PPI numbers? I don't understand what that means. Click on the announcement here where it says PPI. Click on it. And it tells you the Producer Price Index measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. You see that? It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation of the economy. Okay, so you don't have to be an expert to understand what these things mean. You click on any of the 3-star announcements, and it tells you what it means. Okay, they're saying it's the best measure of inflation out there. So if the PPI numbers, the purchasing price index numbers come out higher than expected, it means prices are going up faster than expected. That means inflation. That means the USD is weakening because it takes more of them to buy your hamburger or to buy a gallon of gas or a liter of gas, depending where you're from. I'm from the US, so I talk gallons. So it depends. Are these numbers going to come out higher than expected or lower than expected? Will the PPI show less inflation than expected or greater inflation than expected? And right now, it's hard to predict if the inflationary numbers come in higher than expected. Does that mean the US dollar will weaken or strengthen? Typically, that would mean the US dollar should weaken, but it might actually cause a knee-jerk reaction to strengthen it, because if inflation is too high, which typically it means a weak USD, then that might mean people think that the US will cut back the bond buying program to stave off inflation, right? So instead of trying to play the guessing game, you can just set up the buy stop and sell stop pending orders on either side of the resistance for gold just before the announcement. Look at the 1 hour candles, find the support and resistance that's nearest just before the announcement, set your buy stop above, your sell stop below. You have an opportunity for a large potential profit. Sure, you could lose, could go down, trigger your trade, bounce back up, hit your stop loss. It can bounce around, but boy, sometimes you catch a really big run with this type of strategy. And you can do that on the Euro USD. You can do that on gold. You can do that on the S&P 500, on Nasdaq, or the US 30. All of them will react huge today if those PPI numbers are better than expected or worse than expected. Huge potential for movement. All right, so let's go back to the chart. We see gold is still ranging between the support. What can we do? Before the announcements, can we trade on the ranging pattern? Of course we can. We can go to the 5-minute candles or the 15-minute candles. We could say, okay, it's ranging between this resistance and this support. Let me cheat this up a little for the short-term trading. There's a support right about here, and there's some resistance right about here. Okay, I narrowed the scope because it's ranging. Looks like gold is trying to get near this support level down here. 5-minute candles shows me it's still a downtrend. So you might wait until it gets closer to your support level before you buy on the ranging pattern. Or if it gets near the resistance level, to sell on the ranging pattern. Right now, I don't like the look. It hasn't bounced off the support level yet. So this isn't something I would trade on ranging yet because we're looking between a range and it's not bouncing off the support on that range yet. It hasn't confirmed that it's respecting a support level yet. It's still a downtrend. But if it gets near this area and like this one starts to show these wicks and starts to bounce from down near the support, then that's a sign that you could try to buy with a short risk with your stop loss below the ranging pattern support to see if maybe it'll bounce back up like it's been doing through the day today. Okay. Now, if you're someone who says, well, I don't have to be so perfect with my entry point, then you can just buy now, put your stop loss down here, put your take profit up here, and wait for the movement. Okay. So, if you're less patient, you buy now. And you put your stop loss and say, I'm willing to risk more so that I don't have to sit and wait on it. And to make sure I get in on the movement. Okay, so I put my stop loss below my little support level. I put my take profit before the closest resistance level. And I trade on the fact that the market's ranging right now. Okay, limited risk. I'm risking about half of my potential profit, or even only a third of my potential profit. That's a scalp move. It's a ranging move, short term. All right, so let's look at crude oil. And I think this gold move is going to push down to that support level. I think it's smarter to wait for a bounce off the support level rather than buying in a hurry. I was simulating someone who's less patient with that move, but still the support level may hold and gold may bounce back up even without waiting for the bounce to show itself. Okay, so crude oil, 1 hour candles, 4 hour candles. We see crude oil bounced back up to a resistance level up here. Okay, there's an old support here, support, bounce, breakthrough. It wiggled on both sides of that, and now it found that resistance, which is the old support. So currently, if you're looking at oil, you're selling, right? You're selling on oil with the fact that there are fears about COVID and less demand for oil. You put your stop loss above the resistance. You put your take profit before the support. Okay, so now I'm risking half of my potential profit. I'm going with the current sentiment on crude oil, which is, we saw the headline. Okay, specifically crude oil already has negative sentiment and it's at a resistance level. So it's a nice little entry point. What could mess this trade up is the PPI report coming out. When the PPI numbers come out, if they show large inflation, you could see oil go shooting back up and mess up your short-term sell here. So you have to be careful. The closer you get to that announcement, trading on something that could be affected by the announcement. Okay, so when the announcement comes, if you already have a trade running on crude oil like I just simulated, the announcement could go against this sell position, and my technical analysis could go right out of the window as it breaks the resistance and goes flying up. So, maybe now it's okay to short oil. in this example. The closer you get to that announcement, you probably better be closing off trades if you don't want the potential for the announcement to work against your currently already opened positions. You're probably better off setting up buy stop and sell stops on crude oil just above the resistance or just below the support, waiting to see which way are the PPI numbers going to move oil. Okay, so the ranging pattern you can trade on right now and see and try your luck. The breakout moves, be ready for that as you get close to those PPI numbers. Okay. Yeah, we can look at the Nasdaq, and then I think we'll call it quits. We've been going for almost an hour. So we see resistance here. We see support here. Okay, right now it's at the resistance. Now, specifically the US indices, besides the PPI numbers that are coming out, what at any moment, what headline could break that could drive the US indices way up? What could drive the US indices through the roof at any moment? What headline could come out? So if you're shorting these US indices from the resistance, you better be ready for a strong move the other way with a stop loss, with some kind of risk management, because what's being negotiated in the US right now, that if it passes, could cause a surge in the market, especially the US market. $1 trillion in infrastructure stimulus. Exactly. So at any moment, this negative sentiment that's pushing oil down, that's pulling some of the indices down, could be reversed in a second with a headline that says US House and Senate passes $1 trillion infrastructure deal. If that headline hits, that's why you should have buy stop pending orders up here right now. Have buy stop pending orders in case the stimulus package all of a sudden gets announced that it passed. Have buy stop pending orders ready to go. So not only do the PPI report potentially break that resistance and get you in on a buy stop, also stimulus deal could. For the same reason, prepare a sell stop down here below the support. If it comes down and breaks this support level, maybe the infrastructure deal failed, or maybe the PPI numbers worked against the market. You get what I'm saying? So you could prepare your buy stop and sell stop. At the same time, I can say I'm going to short the market from the resistance. Now the Nasdaq, because of the tech stocks, it's a little trickier. I think a more stable indice maybe to try and short when there's ranging patterns is the US 500. Okay. You see the US markets the US indices aren't really ranging anymore. They broke the resistance. It just went to a new high. The US 500 just broke to a new high, a new all-time high in the past 1 hour candle. So the ranging pattern on US indices seems to be trending towards a bullish movement before the PPI numbers because of anticipation that stimulus will pass. Okay, so I think it's a little tricky to trade on the US indices right at this moment. Okay, you may wait until closer to the PPI numbers, set up your buy stop and sell stops, and hopefully catch a surge with the PPI numbers that can help you. Honestly, I think you're better off on instruments such as EURUSD, gold, oil, okay, that are more directly affected by the inflation report and less directly affected maybe by the stimulus deal. Okay, very good questions. All right, everybody, this is a spot to stop. I think you've got some headlights for the day. Keep an eye on the PPI numbers. Trade on the ranging patterns that we saw currently on the EURUSD, gold, oil, etc. If you like those movements and those price levels, prepare for breakthrough moves with buy stops and sell stops, especially the closer we get to the PPI report. And oh yeah, as if that's not enough to look at, you better have an eye out for headlines about stimulus. Okay? All right, everybody, good luck. Bye for now.